I saw the email about it. When did it start? Oh my God, I'm so sick of meeting hours.
Good morning. If I can have your attention, my name is Taylor Gage, and I'm with the office of Congressman Flood. It's an honor to have you all here in Lincoln. I just have a couple of brief reminders before I turn the mic over to Congressman Flood. Number one, please, if you don't have a name badge for some reason, please go get one from the registration room. We ask that you wear this at all times throughout the day, just so you know who you are. Also helps the aspect of this. Secondly, we'll have Q&A after our panels as time allows. So if you'd like to ask a question, we'll have microphones on each side of the room. You just raise your hand and we'll come to you. Thirdly, there will be coffee, tea, and water all day long. It was downstairs. We'll be moving up here very shortly. Feel free to help yourself to refills. And with that, I'm going to turn it over to Congressman Flood to get us going.
First of all, welcome to Nebraska, welcome to Lincoln. It's great to have so many folks here, and we're pleased to have so many students here from the University of Nebraska. We've got some Creighton University and other schools across our state. I'll be very transparent about why I do this. Other than I enjoy the subject matter, I want to showcase FinTech to our students at the university, and I want to encourage you in FinTech from across the country to locate your business in Nebraska. Those are the two steps that would make me the happiest, because I've seen this state do amazing things with the amazing talent that we have. We have kids that come off dairy farms that understand work ethic. We have kids that come out of Omaha, Lincoln, all our communities, and they have things like integrity, hard work ethic, they're educated, and if they have their choice, they want to stay in this state. This is where they want to live. This is where they want to grow their families. This is where they want to get educated. And to do that, we have to compete with Boston, Austin, and San Diego. We have to create job opportunities that they say, this matters, and this is something I'm passionate about. And if you talk to a 20-year-old business student, I don't care where it is in the country, they're going to tell you, FinTech is very exciting to them. This is how they see the world. I compare it to a 5-year-old that skis to a 50-year-old that skis. I get on the skis, I've never done it before, I'm scared to death, I'm worried about my wrist, I'm worried about my bones, I'm worried about crashing. 5-year-olds are fearless, right? And they go down the slope and they begin a career. That's where digital assets are in America right now. And this generation that's being educated on campuses like this, this is where they want to be in the future. And these are the jobs they want to have. And so I'm hopeful that if you are from outside of the state and you're in FinTech, that you think, you know what? That next operation, instead of putting it in a place where we have to compete for all this talent in Dallas, why don't we just take advantage of these students at the University of Nebraska, put it in Lincoln, and people will work for you for a long time. They'll be loyal to you, and they will help you grow your business. With that, I have to just thank my staff. Of all the things I've done in Congress, I'm most proud of the group that I've assimilated. Kirk Leontis, many of you know him, he's my financial services policy advisor. I always say he's the secret sauce in my efforts on the Financial Services Committee because he's just exceptionally talented. I got to give him a great amount of credit for helping put the structure here. We put some of the best panels we can together to share this information. Taylor Gage, the only guy I know in America that knows how to use a set of chimes when it's time to go to lunch. I love the chimes, and I told Taylor last year I'm really just in it for the chimes because if I had chimes when I was Speaker of the Legislature in Nebraska, I could have passed any bill at any time because it signals it's time to eat. And if you want to know how to get to a legislator, you go through their stomach. And he does an exceptional amount of work. My Chief of Staff, Jake, and just everybody. that comes together to help us. And I, of course, want to thank the University of Nebraska. A little background on this innovation campus. When I was Speaker of the Legislature, some Lincoln business leaders and then President of the University, J.B. Milliken, they came into my office and they said, hey, we want to move the state fair out of Lincoln, and we want to take that ground and turn it into an innovation campus. This was 2008, 9. And I'm thinking, oh my God, how are we ever going to do that? And I bought into the vision because I knew that at the time the Research Triangle in North Carolina was really developing, it was doing big things. I knew we needed more space for ag research, that we wanted innovative businesses in Nebraska. And so I helped champion that through the legislature. And it's not an easy task to move everybody's favorite 4-H event out of Lincoln, Nebraska. But I can tell you two things. Number one, the state fair is thriving in Grand Island, Nebraska, which is one of our finest communities, and they have all new facilities, and they have big-time entertainment, and they are thriving. And this innovation campus, every single year I host this, I get a chance to see what it's become. And this is where your fintech business can be located, in a city that embraces new ideas, with a state that has a legislature that moves at the speed of business. There's a reason we have 114 insurance companies domiciled in Nebraska, beyond Warren Buffett, who helps us with that. It's because our state legislature, many of them are here today, we pass the most pivotal and important insurance regulation laws, because it's, of course, state regulated, within the first 3 weeks of the legislative session, so that our insurance companies have certainty that we're in sync with the industry. That's what you get in a state like this. We move at the speed of business. We understand that businesses need certainty, that they want to know how to make investments in people, and that when they come here, they've got 2 U.S. senators that care about them, and they've got 3 members of Congress that pay attention to them and go to bat for them, a governor that's pro-business, a legislature that's pro-business, and a university that wants every opportunity to show its students this is where you should live in this state. Whether it's Omaha, Lincoln, Norfolk, Sydney, wherever, this entire state is open for business. So with that, we have the pleasure of introducing our university president. He is the 9th president of the University of Nebraska system, which doesn't just include Lincoln. It includes the medical center, which he also ran for a number of years. He's actually trained as a cardiothoracic surgeon for children, a pediatric cardiothoracic surgeon. Can you imagine how stressful that would be, taking a parent's 5-year-old and doing heart surgery on them? I don't know
if that's easier or dealing with the environment that he's in right now, which is difficult in higher education. But he's done a great job leading our university. He's passionate about what we're doing in Nebraska in fintech, and together with the community of Lincoln and our wonderful chamber here in Lincoln, it's just a delight to have you all here. So with that, I want to introduce Dr. Jeff Gold, the president of the University of Nebraska system. Thank you.
Well, thank you, Congressman. And on behalf of the University of Nebraska, and particularly our Lincoln campus and here our Innovation campus, it's a pleasure to welcome all of you. Let me just be interested by show of hands. How many of you, this is the first time in Nebraska ever? Just raise your hand, a good number of you. That's great to see. Please see one of our local real estate agents before you leave, and we'll see if we can make some magic happen. How many of you in the room are students somewhere, anywhere? Wow. It's a great showing. I do notice that the front rows are pretty empty. We are not going to pass the basket, in spite of all the financial challenges we may have. But if you do wish to swipe your credit card on the way out, we can probably accommodate that as well. I want to really thank Congressman Flood and his team for the consistency of bringing this group together around the fintech sector, and to do it here. It's just so important to us to send a loud and clear message that the University of Nebraska is deeply, deeply engaged and committed to evolving educational programs, workforce development, research and scholarship, and community engagement, not just here in Nebraska, but across the country, in these evolving areas. whether it's across the entire broad scope of generative artificial intelligence. We are actually one of the very first in the United States to have both undergraduate and graduate degree programs in generative artificial intelligence. We have a number of what we call upskilling programs for individuals and leaders in different sectors of the economy in the area of AI. And fintech is certainly one of the areas that is most prominent to us. But we also touch widely across the ag sector, and as you may know, this is one of the precision ag headquarters of the world here right on this campus. A lot of work in the health tech sector, the use of artificial intelligence to make access to, quality of, and outcomes of healthcare more successful, safer, and frankly control cost of that. But even more broadly, the activities that we have as it relates to commercialization of intellectual property. Let's just say that of all the universities in the country, and I am very closely connected to many university leaders, particularly those that are the so-called Big Ten presidents and chancellors. And by the way, this is one of those rare opportunities that I get to hold a microphone and not speak about intercollegiate athletics, which, go Big Red, right? Of course. But we are very privileged to have very thoughtful and extremely well-positioned and very flexible tech transfer and commercialization activities that really distinguish us as being really good business partners. And whether you choose to be anchored here in Lincoln, whether one might choose to be anchored in Omaha, or frankly, the attraction across many of our rural campuses and our 500-mile wide campus is quite significant as well. All of those policies, procedures, the flexibility of our legislature, the openness of the governor and the governor's office to solving problems and creating opportunities for new friends and colleagues to join us here in Nebraska is really unlimited. And I will tell you, I am not a Nebraskan by birth. I actually was born in a small city on the shores of the Hudson River. I did understand at some point that there was life on the west side of the Hudson River before you got to the Pacific Ocean. Some didn't believe that, but I discovered it. You might say I took a wrong turn and ended up in the Holland Tunnel, and here I am. But long story short, for a Nebraskan by choice, I've never been more pleased and never been more proud to be a Nebraskan at this time and to be the president of this great university. And just for another minute or two of your time, if I may, the newspapers and evening news are just replete with stories of challenges to higher education, both public and private, changes in research funding. I actually spent 2 hours on a Zoom call last night talking directly with the leadership of the National Institutes of Health and others about the importance of continuing investing in one of the largest growth areas in the economy of the United States, which is, of course, innovation and technology in the healthcare sector. But this is a community that we are so proud of and so successful. And while the newspapers and the evening news may be full of stories of gloom and doom, and believe me, I have my days that I wonder, even personally, having lived through this for many decades, that what is going to be the next shoe to drop. But at the end of the day, the rule here is keep the big thing, which is to support the local communities, have world-class educational programs, make sure that all of our research is not only cutting edge from a scientific perspective, but directly applicable, and make sure that we are never tone deaf to the communities that we serve and that we currently work there. And I appreciate, Congressman, you're raising the point that I spent 25 years of my life in the operating room taking care of other people's children. And I will tell you, while that may sound like a very stressful thing, because a newborn's heart's about a little bit bigger than a walnut, and a small lemon maybe, and there's no question that when some family puts their child into your arms at 6:30 in the morning, they have to have confidence not only in the surgeon that's going to take the responsibility for doing that, but even more importantly, in the team that takes care of every detail of that. And I don't just mean the surgeon and the chief anesthesiologist, etc., but the people that clean the floors, the people that stock the supply cabinets, the people that make sure all the equipment is working and safe. It is a true team effort. And I will tell you, the team here can't be beat. And I am so honored to be a part of it. So with that, I welcome you here to Innovation Campus. I hope if you have time that you can tour some of our other campus facilities here in Lincoln. I hope that you can enjoy some of the accommodations across the street. The food development work that we do here is absolutely amazing. And, you know, pull one of our students aside and ask them what is so exciting about being part of the University of Nebraska. If you ever need an elevator speech, just call me. I got 100 of them. Thanks for being here. Have a great day. Appreciate you. Thank you.
Thank you, Dr. Gold. And with that, we're going to welcome our first panel. State Senator Elliott Bostar is our moderator, and we'll give them just a moment to join us here at the front of the room.
Well, good morning, everyone. My name is Elliott Bostar. I'm a member of the Nebraska legislature representing a district here in Lincoln, but in South Lincoln, so a little further south than we are right now. And this is actually my third opportunity to moderate a panel at Flyover Fintech. And so it's been really, really special to have a front row seat to watch this event grow. And I'm really pleased to see everyone here. And so, first of all, thank you all for being here and coming and sharing this special event. Thank you to the Congressman for putting it together. It's a privilege to be here. And it's a privilege, in particular, to be here with these folks who are exceptional leaders and experts in the space of understanding what we're going to talk about today is AI and banking. Which I think is fascinating, and I'm really looking forward to getting into it. So with that, if we could, maybe we'll go down the line, have folks introduce themselves, and talk a little bit about what your organizations do.
Yep. Hey, awesome. Thanks. Good morning, everyone. I don't know if this is on. Awesome. Hey, check one, check two. Hey, Kevin Johnson with Synovus Financial. We're a $60 billion financial institution based out of Columbus, Georgia. And I am the head of our artificial intelligence program. Been doing that for several years now, but have been a technologist in the FI space for 20. So I celebrate 20 years with Synovus, January 30th, 2026. So I've seen the evolutions, I've seen the pace of change, and Synovus wanted to be an early adopter of the capability that generative artificial intelligence brings to financial institutions. So we've deployed some of those, and I think we'll talk about that a little bit later in the space. But Kevin Johnson with Synovus from Georgia. Thanks for having me.
Great. Nice to meet you all. I'm Vike. I'm the CEO and co-founder of Dynamo AI. Fun fact, I actually spent the first 8 to 10 years of my life in Omaha, Nebraska. So happy to be back after a long time. But yeah, before starting Dynamo, did my PhD at MIT and Harvard, specifically around how do you train AI models in a secure, safe, and privacy-preserving manner. And that is exactly what we do as a company, right? It's help financial institutions, banks, governments identify the risks and challenges of AI and making sure you have the right set of guardrails so that you can actually take AI to production in a secure manner without having to worry about data leaks or hallucinations and other challenges, which we would talk over the course of this panel. Nice to meet you all.
Good morning. Mihala Kaborowski. I am the Chief Credit Officer at FMBO. FMBO is the largest bank in Nebraska and has played a big role in the evolution of banking in the state, having been found even before Nebraska was a state. and banking in Nebraska was illegal in the territory at the time. So we found a way to do it in a legal manner to help the community. The founders did. I said I'm the chief credit officer, and because many of you probably don't really know what that means, I wonder myself some days too. Banks, FMBO included, serve as intermediaries in our communities between savers and borrowers, be those people or businesses. My job is to make sure that we lend the money our savers deposit with us to borrowers that can pay us back. It's that simple. More about FMBO today. We think of ourselves as a great Midwestern bank and a great partnership business. And so we are a traditional bank in our footprint states, which is in the Midwest, but also partner with companies like Universal Parks to issue credit cards for them, for their customers. So we serve about 5 million customers. Several of the speakers before me talked about dairy farms. So we lend to cattle ranchers and dairy farms in Nebraska. If you haven't experienced the technology and innovation that happens there, you should. So we lend hundreds of millions of dollars with sometimes partnership with other banks to those farmers. And also, as I said, issue credit cards and Universal Parks. We also have we provide investment advice and trust services, and we have one of the best public finance teams.
Awesome. So I have the pleasure of sitting next to actually one of our customers, and actually Mihala is very humble. Actually, FNBO was one of the first banks to deploy AI in underwriting, so well ahead of Citi and other large financial institutions. Actually, AI within banking started here in Nebraska, and so really she was the leader in that, partnering with our organization. Oh, by the way, my name is Mike. I'm the CEO of Zest AI. We have been mastering the use of AI, in particular on this topic of underwriting, for over 2 decades. So just sit with that for a bit, 2 decades. So you're going to hear a lot from startups and things like that that might have been here for years. We've been mastering it for nearly 2 decades. And what we're doing, our technology is supporting a $17 trillion consumer credit system. And how we do that through the application of machine learning and generative AIs in 3 different areas. So 1, we help banks and financial institutions expand access to responsible credit by making smarter decisions. 2, we help them prevent fraud by creating tailored AI models. And then 3, we enhance human capacity for insight by leveraging generative AI.
Well, great. Thank you. And like I said, it's really a pleasure to be here with all 4 of you. And we heard a little bit about this, but if you wouldn't mind each just going into a little bit more detail about what kinds of problems you're using AI to solve, and sort of what that looks like. And so let's come back this way. And Mr. DeVere, you were just kind of on that topic, so yeah. Just keep it rolling a little bit, and then let's move back and kind of speak to this a little bit.
Mr. DeVere is my dad, so just Mike on this end. We'll make it easier. And so if you think about what we're solving for, what does expanding access? So the first problem we're solving for is the existing credit system is broken. Nobody actually talks about that, but the existing system is broken. It leaves 30 to 40 million Americans out of it because it's built off of this old math, which is great. It was built in the 1950s when Plato was created and Elvis was at the top of the charts and all that other great stuff. But there is a better way by applying machine learning to this topic. So one thing is we're actually helping them lend smarter. The second area is around fraud prevention. So right now, our banks and credit unions are getting attacked. Bad actors are all around. So they're coming from overseas, they're local, and they're leveraging more advanced tools. Well, the challenge is that these tools that they're using right now are actually really inexpensive. And so if we wanted to create a deep fake of Congressman Flood, it would cost us about $20 to buy the software to do that, to have his ID, his social security card, and a pay stub. That's pretty scary. And so imagine you're Mihala and she's trying to defend and protect the money that we all put within the bank and for each of her customers. So that's one thing. Second is it's super expensive. The solutions that are out there are inadequate. So the average bank spends $4 to $5 on fraud solutions to prevent $1 of fraud loss. Can you guys believe that? That doesn't sound like good business, sound business. You're spending $4 to save one. That seems a bit upside down. I think the third area is a real big area of opportunity, and it's really enhancing human capacity or unlocking human capacity, and that's through the promise of generative AI. In a recent McKinsey study, they talked about the benefits of AI in particular, reaching, if the U.S. economy actually deployed generative AI across its base, you're looking at a benefit of roughly $340 billion to $400 billion unlocked in value within banking alone. So $340 to $400 billion of value unlocked with the promise of generative AI. And so for us, we're helping financial institutions lend smarter, prevent fraud, and really unlocking that human capacity for insight.
So I'll talk about a couple of different technologies that are kind of fit under the umbrella of AI, right? Some types of AI have existed for 30 years, as Mike said earlier. There was a company by the name of Agency in 1992, and they came up with a fraud neural network model called Falcon, and we all used it. It's been around for a while. For us, we developed the first machine learning underwriting models and implemented them in production in 2021. And since then, we've implemented machine learning models. We have about a library of a couple dozen for several marketing tactics. But in terms of generative AI, more recently we allowed access to tools like ChatGPT and Copilot inside our companies, while of course putting fences around our data and making sure that that is secure. And about a year ago, launched our own assistant that is trained on banking and compliance. And that's where our employees mostly operate today. And we developed business-owned assistants that are specialized in things like the call center and branch operations. And more recently, started using Gen AI with our structured data, which is stored in Snowflake.
Yeah, I think like one of the things which we are like focusing on as a company is to enable our like financial institutions and like banking customers to adopt generative AI with confidence, right? So that means that like the number one use case I'm seeing across like multiple customer of ours, like Experian, PayPal, like large like asset managers, is around like how do you ensure that you're actually getting the correct result? Right, so how do you make sure that your model is actually not hallucinating, or it's not like accessing some like sensitive data and like leaking out some sensitive information which it's not supposed to like talk about? So unlocking like customer support has been like one of the biggest applications of like generative AI I've seen, both which my team uses like internally to like do whatever tasks, but also for our customers in like contact center or like customer support. And then the second big application which we are seeing is around like effective coding strategies. Right, so if you're like writing like code, every software member in my team is probably like 10 times more effective than they were like literally like 8-9 months ago, just because of like the advent of like Claude, Perplexity, like Windsurf. You have so many high quality applications. If you adopt them in the right way, we are seeing like productivity massively increase. So I'd say like these are like the two most like high impact use cases we are seeing in production with generative AI.
Yeah, I think I'll agree with everything everyone said up here. I mean, for us at Synovus, it's been focused on really two areas: operational efficiency and team member productivity. So things like Copilot, Synovus GPT, access to assistants and agents that give our banking community knowledge information faster, that's accurate, that they can trust in front of customer has been a huge push for us. We've done some bespoke solutions like sentiment analysis in traditional media, where we take a look at an extra layer of analysis for that traditional media. And then when the administration changed over, there was a ton of executive orders that came out of the Oval Office. We were able to build a tool to analyze trained or configured based on Synovus's 9 risk parameters for direct or indirect impact to the bank and then customers. So really in the team member productivity space, I think literacy is a huge component of what organizations need to be able to do in addition to the technology. You can't just throw the technology out and expect proper or accelerated adoption. So if you're looking at some of those things, I would say literacy is a critical component. And I think one of the things that I'm most excited about, and we've talked about a little bit this morning, is there are frameworks to introduce generative artificial intelligence into your organizations in a as safe as a possible way that you can. And NIST has a great framework, very similar. We had traditional models at the bank for years. So we went from 20 or 25 traditional artificial intelligence models, very much in the marketing space, and have extended those to the generative solutions.
That's really great, and so I appreciate that and understanding a little bit more about how AI is being deployed. One of the things I like about this panel is that it has financial institutions represented as well as technology companies, and so I appreciate that we can see kind of both sides of this, and I hope we get into that more. But to kind of, I want to start from the financial institution side. So Ms. Koborowski and Mr. Johnson, if you would talk about a little bit specifically about what you have these AI firms contracted to do, and also, if you would, what prompted your firms to kind of start engaging with AI? Where'd that come from, and what is it doing, and maybe how is that developed?
Sure. So I'll start. We at FMBO want to spend our resources on things that differentiate us in the marketplace. Building software and compliance solutions embedded in the software is not something that is a core capability of ours. And so we always partner with other firms that specialize in that when we need to. So that's why in 2019 we partnered with Zest, with Mike and his team, when we wanted to explore using machine learning for underwriting. So we always look for ways to approve more customers. We process about 150,000 a month, and we have to do that in less than 10 seconds, as you would expect. And so we always look for new ways of doing that, and they had a solution that we wanted to test, and it proved to be a great success for both of us.
Yeah, generative artificial intelligence is new, right? And you've got to partner with organizations that have a couple things. One is as much experience as possible in the space at that point in time, and then scale. So I think partnerships are critical to help the organization build out their own generative practice, and a partner helps do that safely and securely and navigate through some of the challenges, the risk challenges, the security challenges, and even the optics of some of the Gen A, I'll call it Gen AI scary, that is just the unknown. And having a partner at your side to help push through some of those things and push solutions into production, I think is why you need those partnerships.
Great, thank you. And now, so on the technology AI firm side, what do you see being requested by your banking partners? And what are you doing to sort of meet those needs and stay ahead of the expectations of, what the needs are going to be tomorrow in this space? Yeah, please.
Sure. So I think their number one request is to make sure that it's not only about doing a proof of concept, but rather how do you actually take these applications to production? Because that's where the real value is, right? It could be a good ROI, reduction in costs, better performance. So when our banking partners or financial institutions we work with, in order for them to take their applications to production, they want to ensure it's fully secure. Again, the models are not hallucinating. You have clear explainability and auditability on what the AI is actually doing, and you want to basically have the controls to make sure that how do I make sure these models are adhering to these kind of regulations or these kind of policies. So that is what we're enabling our customers, right? We provide them with the tools so that they could create these customized guardrails to align with their organizational policies. This could be as simple as making sure your AI does not give financial advice or legal advice. But then there's a lot of nuances here where the way you define financial advice is different when you're a regional bank versus a global bank. So I think it's overall around how do you ensure that you are taking AI to production in a trustworthy, safe, and compliant manner is their number one request, and having the full-fledged visibility over what is happening.
That's cool, man. Actually, what you're sharing is a very complex thing to do, and so really hats off to solving for that. So there's three things that I would say for Zest as far as when we're working with a bank customer or a credit union or what have you. It's first off is just to make smarter decisions. Is by leveraging more data and better math, you're able to end up with a more accurate prediction on who you should give a loan to. And so this idea of one size fits all that FICO is out there and it's just the entire nation is exactly the same, that's just a technology limitation. So it ends up kind of being a dumb tool. But if you tailor a custom model, you're able to see a 200 to 400% increase in accuracy of the model itself. I think the second word I would say is optimize. So we help banks optimize for access. And so within models, when you're building them, you not only want it to be an accurate prediction of financial outcomes, but at the same time, guess what you want to do? You want to drive business outcomes, and you want to make sure you're saying yes to as many customers as you can. And so we look for signals within our model that may be pulling out different groups of Americans. And so, for example, if you look at the last 100 models we built, we increased approvals for female borrowers with keeping risk constant by 27%. Who doesn't want their grandma, their mom, their sister, their daughter to have access to responsible credit? And so that's optimizing access. The final area is around efficiency. So efficiency is absolutely paramount. And so AI not only drives business outcomes, increases access, but then from an efficiency perspective, our customers are able to auto-decision 9 out of 10 consumer loans that come across their desks. The average bank is at 1 in 5, 20%. Consumers in a recent Harris poll said they want an answer on their consumer loan in less than a second. So it's absolutely critical that you efficiently decision on loans. But then there's a secondary effect of if you need less resources, you are now more resource efficient. And so our most mature customers are able to eliminate roughly 2/3 of their back office and underwriting resources by being able to auto-decision. And so it's those smarter decisions are critical as an organization, that we help our customers with.
Thank you. So I would like to, I think, talk a little bit more about some of the specific work that the firms here are doing with each other. And so if we could start with, digging a little bit deeper into the work between, Zest AI and FNBO. Is there anything else to kind of, can you get a little bit more granular into how that relationship works? Ms. Kobraski, if you'd start, please.
Yeah. So continuing on what Mike said, we, again, at FNBO, imagine the experience of us issuing a credit card in a universal park. So a customer walks into a park and we offer them a credit card that is going to help them save 10% and build a rewards program. And that experience, the last thing that Universal Parks, the partner, wants is for us to decline the customer. So being good at finding as many possible yeses is one of the core values that we provide to these partnerships as a bank. And so we think we do a very good job at it, and it's with very advanced math. And so in 2019, when Mike and I were talking about the ability to use more advanced analytics to do even better there, that was, of course, very important to us, and that's how we partnered. And after that, we continue to use their software to continue to develop other models. I talked a bit about some of the marketing models that we developed using their platform. And in general, we've developed a relationship where they understand how we work and we understand their strengths. And we typically work together on other challenging analytical problems. So they're one of the partners that we call when we have a tough nut to crack.
That's true. I would just add to that. So if you guys think back to 2019, none of the 10 large banks were deploying machine learning. And so the problem that we solved together and with Mihala's leadership here, this is a first-in-nation moment to be able to deploy a machine learning model at scale. I think what's really impressive about the partnership that we've had is we worked together in partnership on the first one, and then we stepped back. And so their team is trained just like our data scientist team. We have data scientists all across the U.S. We're a U.S.-based company. I think the final comment I made is more on the softer side, is that when you have that right customer, you are learning together. And so for us, it's really appropriate to be here in this innovation space because FNBO for Zest was a massive learning ground for us. We learned so much from Mihala, Susan, who's also here, the entire team. And so for us, we learned just as much in that process.
Thank you. That's really, I appreciate the insight so much. And so I want to talk about, similarly, the connection between Synovus and how they're working with Dynamo AI as well. So, Mr. Johnson, if you would start us off.
Yeah, so I think the biggest thing we're in we fund into Canopy, and that's part of your guys' ecosystem, and they host a Gen AI Council for the 40 largest banks in the country right now that Synovus is a part of, and we talk through things that other fintech programs are seeing from an innovation perspective. We're able to talk from a banking perspective, how to iterate, and some of the challenges that we see in the space. So every month we're sitting down with a group of humans that are talking about, here's the new latest tech, here are some challenges that FIs are experiencing real time in implementation, deployment, adoption. And that's for us been the strength of us being able to move some of these systems into production.
Yeah. So it's basically working with leaders like Synovus and other banks. It helps us discuss what as a industry, what are the challenges we're facing and the best strategies. across like AI on like how do we like adopt so that we all get like the best returns. I think like that's like the biggest discussions and like the most strategic like partnerships and like discussions we have with them. And it's led by Canopy Ventures, who backed one of our funding rounds and have like the LP base of like the top 40 of the top like 100 US banks.
Thank you. So, Mr. DeVere and Mr. Mugunthan, can you speak to what it takes to keep customer data secure in an AI system? How do you protect sensitive information that's going into these AI models? What does that look like?
So for Zest, we're actually not dealing with any PII or customer information. It's super critical in the underwriting process that we actually strip that out. And so that's important. When we're talking about generative AI, for us, it's really about having a structured model and understanding what data it's learning from. And so unlike ChatGPT that might be on your phone today or Claude or what have you, that's a generalized model, ours is a closed instance. It's learning only what we give it and feed it. And so if we think about one of our generative AI solutions, she's called Lulu. She's been trained on every bank call report on a real-time basis. She's been trained on every credit union call report. So call reports are the financial performance of each of the financial institutions. And that's what the government turns around and uses to make sure that they're safe and sound. And so she's been trained on that publicly available data. But at the same time, she's also been trained on, we're at $5.6 trillion of assets under management that flow through our platform. Everywhere, large one being Citibank or Freddie Mac to Molokai Credit Union in the great state of Hawaii. And so all of that data, we have a lot of data in there. But when we're asking her a financial question on performance, it's super important that we're not having her do extended learning where she's going out and maybe pulling out a news article about FNBO and treating that as a fact. That is not a fact. And so we really structure the data that she's able to train on such that we're able to drive down our hallucinations. And so, what would you say, 20 or 22% is the average hallucination rate for like a generalized model?
Yeah, I mean, it depends on the context, right? Like sometimes it could easily be even more,
yeah.
Right? Like it's all about like the amount of like information you have like access to.
Yeah.
And that is the biggest challenge which I personally see, right? It's like neural networks are very smart, right? Like the amount of like attacks we were able to do like 5 years ago to like now it becomes very easy for us to like break into like any system and like leak sensitive data, to be honest, right? And with the advent of like AI agents, we could like do it on like Copilot, Notion, like Claude, like every single like application now has like more vulnerabilities. So that is why I would say that like as humans are getting smarter, neural networks are like AI is also getting smarter. That means that like they have the capability to like memorize exact information. And this is the number one challenge we are seeing when like a large financial institutions adopting AI. They are worried about like the data memorization risks. And that is why we're emphasizing that like as a company, we provide them with the right set of guardrails so that it would like basically on top of like your like AI application, it's like a firewall that would like make sure something that is not adhering to your policies would automatically get flagged or blocked. And you have the controls over like how you want to define these policies. And the other thing is also like there are techniques like differential privacy using which you can actually train your models so that it doesn't exactly memorize your sensitive data. But yeah, data protection, data privacy is like number one concern.
These guardrails that you're talking about are really absolutely critical. And so for us, being able to get a hallucination rate in the 20s down to 2% for our offering, it's critical. Imagine you're a regulator, the NCUA, coming into Nebraska, 50% of credit union members have their loans decision with AI, CES technology. So it's very important when that examiner comes in that data is accurate, that the insights are accurate. So when you think of what Dynamo AI has created, it's a critical component to this really watershed moment for us as an economy with the application of Gen AI. That was my pitch for Dynamo AI. I don't know.
I appreciate it. Yeah, that was great.
Yeah, thank you so much. So, Mr. Johnson, Ms. Koborski, it's already come up once in this conversation about how trivial it would be to create a deep fake of Congressman Flood. And that technology, ease and availability, I think is concerning to a lot of folks. And especially when you think about biometric authentication of systems with like Face ID, voice. Give me some of your perspectives about how, what is it going to take to secure the future within the world we find ourselves in right now?
Yeah. Can we start? The pace of evolution right now in this space is something that's unprecedented. I think you're going to have bad actors for things. I think we've also got to be prudent on making sure we're good actors. I think at the end of the day, and this is the opinion of Kevin Johnson, not the bank, I think math will probably be able to recognize other math. And I think we've got to make sure we iterate and stay up to speed with those bad actors. The other thing I'll say is patterns of behavior, normalize the patterns of behavior so that you've got a consistent view into what your transaction portfolio looks like. Some of those may move into a yellow category and not be fraudulent and come back into the green, and now your green category expands as you've recognized a new pattern, and then sometimes they'll go off the reserve. Fraud for, and I'm not a fraud guy, so I'm a little bit, out of my area of expertise on the fraud space, but we've got to continue educating our customers on risks and scams and ways to mitigate those.
Yeah, we have to use biometrics, right? I think it would be a customer experience that nobody would be comfortable with in this forum, right? To try to open your banking app and not be able to do it with your face, right? And of course we have voice authentication in our call centers, right? Customers expect us to recognize when they're talking to us anymore. So it's a must to go there. And how do we protect our customers and protect ourselves? It's what Kevin said. You have to be as good and constantly look at the data and we work with a lot of fintechs and other technology providers to implement these solutions because we are not experts at biometrics, nor do we want to be. What's interesting is that all financial institutions feel very strongly about fraud, and they have no qualms about cooperating on combating it. So the sharing that happens in that space is a different level, and we work. So if another bank, if Synovus shares with a technology provider of biometrics. That they had a specific fraud pattern, yep. That technology company is likely to put a control in place that is going to protect our bank. So it's constant fighting, but I think we have the tools to do so.
So I'm interested for each of you. How do your companies treat the use of generative AI internally by your own employees? What sort of guidelines exist for using AI tools in the professional environment? So, Mr. Johnson, we start with you and kind of work our way down.
Yeah, the first thing we did was create a policy, and that dictated and drove other governance components for us at Synovus. All of our team members at the bank have been trained on what Gen AI is and what it isn't, and how to use it safely. There's also required annual training that we put our team members through. So literacy is a critical component of any framework, and I think that for us, we've been extremely fortunate to see great adoption by our bankers and our teams because of, one, the capability, but also how to use it. So I would say policy, set the guardrails, make sure you've got a measurement framework in place for your organization to be excuse me, to be able to look at those types of things?
It's kind of interesting for us because like we are the ones providing the guardrails for all the financial institutions and like banks. So yeah, we do enforce it within our team. So whatever is going to the customer is first very well validated, audited by our teams. And then, but I think like it is very important to like make sure that like access control or like ensuring like private data doesn't leave. All these things need to be very, very like focused in an organizational level before like we get the entire community to start adopting them.
Yeah, everything they said, and I would just add, we, as part of our governance, we have certain principles. One of them is we will go in this space with human involvement, and so we continue to disclose that and tell our employees that this is a result that you're getting that needs to be evaluated by you still. And so, for example, we also, when we created these specialized assistants, I was talking about them in the call center and the branches, where customer-facing employees have to deal with a lot of information. We have created the roles of assistant owners and those teams, and their job is to constantly test the accuracy of these assistants. So yeah,
I think starting first with education, obviously having the right guardrails in place is super important. For Zest, this is not necessarily a new thing because we are an AI company, just in the same way that they're an AI company. And so when we started, our first AI model took us 16 months to build, which was 6 months faster than the largest bank. So we were very proud of that. Last week we clocked in at 8 minutes to build a model. And that is with the application of generative AI, learning from data scientists that are all brilliant. The way we stay competitive and ahead of our nearest competitor who comes in from India, they obviously have a lower cost basis. But we stay ahead of because we out-innovate them. We hire the brightest talent that actually are able to build models that leverage generative AI at scale. But it just happens to be really smart people like Vike over here who went to MIT or Harvard or Cornell or all these great skills who are brilliant. And so I think what I would say beyond, the blocking and tackling there, it is this constant focus that you should have on staying ahead of what's next. Because generative AI is great. Now we're getting to agentic AI. And so we're already moving beyond that as an organization. So if there are other business leaders out there, I'd be challenging you to think about that next 12 to 18 months, for your business, because agentic AI was like last year for us. So it's what's next beyond that.
Thank you. Mr. Magunthan and Mr. DeVere, how do you see the needs of financial institutions differing based on the scale and the size of those enterprises, from small community bank to multinational financial institution? How does that vary within this context?
So I think for us, when we started out our mission, building these purpose-built models was to make AI accessible for all. So it shouldn't just be for the largest banks. And so contextually, one of our top banks that we work with has hundreds of machine learning engineers. But then when you get to a regional bank, oftentimes they have one. And so how do we, as a technology company, have a solution that can scale from the largest bank but all the way down to the smallest financial institution? And so our smallest financial institution we work with does 60 applications a year. It's Christian Church Credit Union, tiny little credit union. And guess what they get? The exact same model that we built for the large bank, the exact same documentation that we built for the large bank, the exact same fair lending reporting that we built for the large bank. And so we've been purposeful about making sure that AI was accessible for all. Now, obviously there's differences because I have data scientists and engineers and business analysts that these smaller financial institutions might not have. And so we act as an augmentation to their organization. But I think to get it right, you need to, and I think, if just putting my I Love America hat on, in order for us to maintain competitiveness of community, mid-sized banks, smaller financial institutions, we have to help them put tools in their hands that the large banks have. And so us as technologists, we really need to push and hold that close, that needs to be a part of your strategy.
Yeah, very well said, right? I think one thing we've observed is like with the small banks, we kind of like try to give them like out-of-the-box solutions. So we provide them with like security sandboxes that they could easily like plug in with their like infrastructure, and we kind of like help them even with the implementation and the deployment process. While when you're taking like a large bank or a financial institutions, they have like hundreds, if not like thousands of like architects, like machine learning engineers. So fundamentally, both of them want to make sure they're able to like take AI to the next level with the right level of like security guarantees. So for us as a security company, we want to ensure it doesn't matter if it's a small bank, medium bank, or a large size bank. The offerings and the end goal is the exact same, which is to make sure you have the right set of security controls, guardrails to productionize AI. But it's just like the difference in scale.
Great. So next question for everybody is, how do you see AI impacting the customer service experience for financial institutions over the next, say, 5 years? So, Mr. Johnson, we'll start with you and work our way down.
This is what I think. Anybody that's about to make a 5-year prediction in the generative AI space on stage right now is lying.
You're creative.
I think we'll continue to evolve. I think it will be, the technology will be more ingrained with the tools that our team members and our customers use every day. I go back to the agentic conversation, and in its simplest form at Synovus, we've got an orchestration of a handful of agents that simply go through our operation procedures, identify manual touches in those procedures, and then map them to modernized technology taxonomies in the bank. So I think that's a very organic way for organizations to take advantage of the advancements of some of these technologies. The call center, customer support space, team member support, access to information space will continue to evolve. But for us, we're a relationship bank, so we're going to maintain the human customer relationship. We're just going to provide tools, capabilities to both the bankers and the customers to help them bank how and when they want to.
Yeah, I think like for solving like pretty complicated and like challenging tasks, like AI is definitely going to like make life super easy. And then on top of that, I'm a big believer that like we would have like more hyper personalized responses, specifically in like customer support. So that means that like with like AI, you pretty much can answer like something that like mimics you, but like doing it for the right reasons in the right way. So like even like sending out an email, or like right now, to be honest, like I use like our own like small model to compose like responses that is like trained on like the way I send out emails. So imagine like every customer support representative, knowledge sharing, knowledge transfer becomes way more easier, so that if you have like one like salesperson or like one support person who's doing a very good job, it's like pretty transferable to the next person now, and as an organization, your efficiency is like increasing now. So yeah, that's what I believe in.
Definitely technology will get better, right? We'll have better voice recognition and chat capabilities, no doubt. What excites me the most, and I think it's probably because I have now children of working age and they're likely to work in a customer service job, is the fact that we can make their job easier, right? We do complex things in banking and in general in many organization outside banking. So these customer service agents have to to go through just a large amount of information and find palatable answers to a customer that calls. And so that's what excites me the most, is the fact that we can help them do a better job with our customers.
Yeah, I mean, I think certainly making it easier, for the average consumer is critical. That ease also comes in the form of, instead of financial institutions reacting to what's going on, it's actually being proactive. And so having generative AI that's looking at trends for your bank or things that are going on within the marketplace, but then, as Mike shared, that hyper-personalization to look at what's going on with an individual customer of that bank and being proactive. And so, for example, one of the things things that we're working on right now is imagine you're a bank and you have a portfolio of loans now. Okay, great. You underwrote it at the point of origination. But things change. A year later, you might have lost your job. You might actually be in distress. And so actually having AI that is purposeful about finding individuals and finding customers that may be at risk and need to proactively be reached out before they get to collections to be able to talk to them and say, hey, do you need to restructure your loan? Or things of that sort. And so I think the thing for me beyond the kind of simplicity, making it easier, the hyper-personalization, it's that next step beyond that. It's that ability for a financial institution to actually be proactive within the marketplace and lean into consumers.
Right, when we'll start. Question for everybody again. This time we'll start with Mr. DeVere. What do you think? What do you think people are missing when it comes to AI in banking and finance? What would you like to share that you think kind of people aren't getting yet?
Well, I think, so I'd first start with AI. We're not talking about Terminator, the movie, where it's like taking over the bank and making all the decisions for the bank. So that's not what we're talking about here. And so the first thing oftentimes, whether I'm in DC or talking to a wonderful group like this, is like AI can be a force for good. Yep. Within the credit space today, 30 to 40 million Americans are left out, as I shared earlier. But you think about the impact that has on the average American, that's an issue. That cost America, our study in 2023, $1.2 trillion in lost loans by using old technology. So currently the existing credit system is built off of an algorithm. It's just an algorithm that was created in the 50s called FICO. Right? It is leaving tens of millions of Americans out. So I think the thing that I would say for AI has been around for a while. But I think if we have it purpose-built, it actually can be a force for good.
Yeah, for me to sit here and pretend that I know something about how AI is going to change banking that everybody else somehow misses would be a little arrogant. I think what I was listening to a podcast a couple of weeks ago, a Moody's podcast, in which the speaker was using a metaphor of, when we envision flying and looked at a bird, we created the airplane, which is useful but not exactly a bird. And I think that's what's going to happen here. We're probably going to create something that is going to be very useful, but it's probably not going to be anything or very much like the vision we have today.
Yeah, I feel that the impact is going to be pretty large. So imagine the number of wider population, large number of population, AI would be able to reach, and it's not only going to empower the larger institutions, but so many small businesses can have a massive impact with AI. They could be making more profits, and I think in the space of education as well, right? As we were talking about, AI is going to play a big role, and it's going to create a positive impact.
Being the fourth person on this fantastic panel to add anything to that is difficult. It's a capability that force multiplies. I think it's going to be a tool that we can continue to leverage. I think your point around the education system, I think there's a ton of opportunity for us to accelerate. I know students are leveraging Gen AI to assist with work, and faculty and administration are leveraging Gen AI to catch students using Gen AI. So I think that's an opportunity for us to look at.
So now I want to turn it over for audience questions and make sure that there's an opportunity to at least maybe get a couple of those for the panel. So I know that there are some microphones around, and so yes, if anyone has a question, put up a hand, and we'll make sure that a microphone gets over to you.
Hi, definitely curious. We talk about the efficiency of developing models. I think, Mike, you mentioned 8 minutes to develop one. And then also, I think in our industry is hyper fast decisioning for our customers when it comes to credit. And then also balancing credit loss and risk. How do your teams balance fairness for customers with this really efficient approach to modeling, but also balancing credit risk when I think that like we're in a pretty heavily scrutinized by our fair regulators around consumer protections and fair lending?
Thanks for the question. So when we think of the topic of fairness, and so fairness to us means every American gets a fair shot. That's what it means, right? It's not taking from one group and giving to the other. You just want to make sure you're evening the playing field. And so for us, we actually it starts first with the model development. You have to make sure the data that you're training your model on is representative of the market that you're serving. And so back to that Molokai example, the Hawaiian Islands, right? FICO's not trained for Pacific Islanders or Hawaiians. And so actually having data that's trained on them. Second thing is making sure that the company you have and the people who are building the models are representative of the communities you're trying to also serve. And so having an entire company that looks like me is not helpful. I need different backgrounds, different experiences. That's important for catching different things. The third area, which is some of our big secret sauce, is really around debiasing and optimizing models for access. And so on a real-time basis, when we're building a model, there's not a single model that comes out. It actually delivers hundreds of alternative models that looks for signals within the models that might be a proxy or estimation for, is it a man or a woman? How old are they? What is their race and ethnicity? And so if it picks up signals that might be proxies for that, it pulls them out, but then drops in 3 or 4 different signals so that you maintain accuracy because you've got to deliver business outcomes. But at the same time, you can also do good for America and ensure that everybody does get that fair shot. And so I would start with it's an intention. One of the professors at Berkeley famously talked about mindful AI, and it always starts with purpose. And so our purpose, when I say expand access to responsible credit, that expanding access means I'm ensuring that there is that fair and even playing field. And that is a unique part to how we build our models.
Mike, did you pay for that question?
Well, I did.
Thank you. Additional questions?
Paul, come to you.
Thank you. Sorry that took so long. Hi, I'm Kevin Crown. So I really like your name, Kevin. Squared away name. So I am a student, so I'm going to ask you a more student-based question, if that's okay. As an early career professional, I think we're seeing a very large change in the skills needed, and it's constantly changing. So I wanted to ask, what would you guys recommend as some early skills right now with AI? And also, how do you stay ahead, or what would you recommend to stay ahead of this curve?
Yeah, I mean, the first thing that comes to my mind, great name, by the way, continuous adaptability. I talked about the iterations and the pace of change that we've seen over the last several years. It's unprecedented. It will only continue. It will only accelerate. So I think adaptability has got to be a core component of maintaining relevancy and currency. I'll talk to you maybe on the technical side. You can.
Yeah, sure. I think definitely making sure you're up to date with what is happening, right? So if you're studying computer science, I'm 100% sure that you need to know how LLMs work or the applications and then everything you could do with that, right? But then it's equally important when we hire sales marketing people in our company, you need to still understand the subject, but are you able to effectively communicate it to someone who is not an expert? So I think it's the balance of the technical knowledge, but then also how well can you accumulate, how well can you communicate to your audience? So that's the main skill set which we look for.
Does that mean that you would be recommending prompting engineering as maybe a new soft skill that should be coming?
Oh, it's definitely a skill which is needed at this point.
I think, but beyond that, so obviously I'm a technical person. We're a lot of technical people up here, so we love math, we loved calculus in high school, things like that, which many people can't say. But there is also the creative part. So AI needs to be trained on something, and so let's not lose sight that artists are not going away. Yeah. We have to generate new content for these AI models to learn from, in particular generative AI. And so I got a ton of kids, and a lot of them are very quantitative and math-oriented. but a couple of my kids are wonderful artists, and there is a future for them as well. And so while we're excited about AI as a technical skill, let's not lose that you actually have to have data to train it on, which is what humans will always be. We are that source of inspiration.
Awesome. Thank you, guys.
Hey, Sean Pan here. This one is for Kevin. Kevin, I'm just kind of interested in the M&A side of this. So now you've got Synovus and Pinnacle who are coming together. Have you guys been on a similar trajectory, or is this going to be a new thing for Pinnacle as you guys merge those two organizations together?
Great question. I'm going to dance around a little bit, right? So merger pending regulatory and shareholder approval. Yeah. Generally speaking, of the two organizations, I think one's maybe a little bit further along in their AI journey, so that's a consideration for us to look at as we zip the two banks together, which we're extremely excited about. I think that the other thing I'll say is we're uniquely positioned at this point in time, based on where we're at in the AI maturity cycle, to leverage generative artificial intelligence in a way that we haven't seen in a MOE before. So I think the opportunity to do just simple things like one loan policy or credit policy against the other and compare similarities and highlight differences, and then even a potential path forward on what a combined policy would look like in the space. I think about disclosures, right? Everywhere that Synovus Financial is listed on disclosures is going to change to Pinnacle Financial Partners. That's another opportunity for us to accelerate where in previous M&A activity it would have been done with a control F and a bunch of humans.
We have a question up here.
This is the question is for the bankers. We talked about the speed, or you all talked about the speed of change. How do you keep the regulators up? What's going on with regulation when you're talking about this?
They don't want to answer that question.
I think, I think we have been so when we implemented an underwriting model that was different, right, with machine learning. They had a lot of questions, and rightfully so. And so we had to be able to answer them all, and we worked with Zest to answer, and were able to get them over the finish line. Now, we hear that maybe other banks don't have a similar experience, but I tell you, we are going to face questions that I'm not sure how we're all, including regulators, going to fare on. Just an example, Mike was talking about building fair models, right? There's this concept now that you can create synthetic samples that would completely debias underwriting models. Now, imagine developing underwriting model on data that doesn't come from the real world. Like, how are we going to think about that as bankers and regulators? I think we're going to have a lot of challenges ahead of us, but we need challenge, right? We need to have people that are pushing back on us because we have a lot of responsibility in our communities.
So we booked, I think, 104 regulatory meetings last year. And so I would just say to lean in on your question is that for a technology company, we lean in with the regulator, so we're under the purview of the CFPB, and we welcome it. It makes us better. And we welcome engaging with the OCC and the Fed and the FDIC, and that's the work that we think we can do as technologists in making sure we're educating and trying to influence policy where possible to help Mihala and the people at FNBO, so when those examiners sit down. I think the second area is also on education. So we've been educating regulators across the U.S. government just on the topic of AI, because the exams and regulations that are on the books right now, if they were applied evenly across the entire industry, are actually sufficient. They just need to be tech neutral across the board. And so for us, it's about leaning in with the regulators. It's educating the regulators. They're not the enemy. They're there to protect the end consumer.
We have time for one more question right here.
So, as a retired citizen in Nebraska, it's fascinating to hear about all this innovation and what you're doing and your different perspectives on it. As a state, we've been, and I don't know if you have an opinion on this, as a state, we've been asked to give unredacted details such as birth dates, driver's license, social security digits to the government. In listening to you, do you have an opinion about that, whether that endangers our personal security, or is it so basic in listening to you that it's almost irrelevant? It's hard for me to understand, and maybe you don't understand. Have you seen this out? I mean, is it something that, you all have an opinion on, or is it not something that's related?
I think it's all about like how it's going to be used, right? And like if it's going to be used for like confidential reasons, like within like a particular like specific sandbox that is like fully secure, for like improving like life quality or like standards, then I think it's like fine. So it's all about like the end application and like how secure you're keeping that like box, in my opinion.
I would add that this is where we need the government to make sure that we have guardrails and protect privacy with the new world of AI. So.
Thank you. I think that's all the time we have for this panel. Please join me in giving a round of applause to this wonderful group.
We will recess for a quick 10-minute break. Please listen for the chime. It will alert you when to come back into the room. There's coffee, water, and iced tea outside the door if you want to refresh. we could have everyone take their seats, we're going to get started in about 60 seconds here. If you could take your seats, we'll start in 60 seconds.
Okay, if we could get everybody to settle in here. I'd like to welcome you to the Stablecoin panel for this part of the session. My name is Bob Hallstrom. I'm a state senator from Legislative District 1 in southeast Nebraska. I was pleased and honored to have Congressman Flood ask me to moderate the esteemed panelists that we have here today. I did ask him, I said, of all the people in the world, why did you choose me? And he simply said, because Senator Bostar didn't want to do two panels. So here's what you have today. I do just want to take a moment. I've known State Senator and now Congressman Flood since he began his career in public service, having been elected as a relatively young man, and compared to me to this day, he remains a relatively young man. I consider him to be of sorts the godfather of the digital asset depository institutions and stablecoins in Nebraska. He was responsible, as he alluded to earlier, for the state legislation that put Nebraska in a position, notwithstanding the fact that in my former life I probably proposed 100 friendly amendments to his bill, but he's put us in a position to be welcoming to the industry. We have a regulator and Director Lammers, who is a promoter of the industry while still maintaining prudent oversight and regulation of the industry, and to position us to capitalize and benefit from the laws that we've put on the books. With that, I am pleased to start this session off by asking each of our panelists to give a brief introduction of their company, themselves, and the role that they play in their companies. So, Francesco, please.
Thank you, and thank you for having me here. And this is great to be in Nebraska for the first time and an awesome conference. So, thank you to Congressman Flood and Kurt for doing this all. I'm Francesco Castella. I'm with Circle. I'm a senior manager on our global policy team. So, working on dealing with anything in the realm of regulatory issues or legislative policy. I know we were deeply involved in the Genius Act that we were here to talk about today. So kind of dealing with that. And Circle is, if no one knows, the largest regulated stablecoin issuer. We are based in the U.S., largest in the U.S., and just happy to be a part of the conversation here. Thank you.
Hi, everyone, and thank you also for having me. It's an incredible campus. My name is Amy Kim. I am the head of global policy for our crypto business at PayPal. PayPal has been in the payment space for over 25 years. Back then, kind of digitizing payments, taking them from offline to online. Now as we watched digital currencies grow, looking at how to move payments from online to on-chain. Seeing a lot of the benefits, speed and efficiency I know we'll talk about. We really see it as one of the next big innovations in payments. And just so that you know what our background in crypto is, about 5 years ago, we enabled our customers to buy and hold and sell 4 types of crypto that we viewed were more of digital currencies. Since that time, we offer about 7, and 2 years ago, we launched a stablecoin called PayPal USD or PYUSD. Paxos is the company that's the issuer, and we coordinate with them quite closely. And so we have the 7 cryptos mostly available in the United States, looking to expand that. But ultimately, the goal is to make this useful for payments between consumers and merchants, and help enable people to actually use it for that reason.
Bob, first of all, very happy to see you moderating the panel. Looking forward to the softball questions. I'm Paul Nooner. I'm the founder and CEO of Telcoin. We are a digital asset wallet and bank that is really focused more on the cross-border use cases for stablecoins and multi-currency stablecoins. But we also advocated for the Nebraska Financial Innovation Act, and back then cooperated very closely with the Nebraska Bankers Association when Bob was there. And I think that's really what Nebraska has done right. Not that Wyoming, which if all you know are aware, Wyoming passed the first kind of crypto banking law, if you will, in the United States, and Nebraska, in my opinion, was second. The legislation here really focused on, cooperating with, we cooperated with the Nebraska bankers from the very beginning. It was contentious, obviously, at the beginning, but I think when everyone realized that what we really were focused on was the technology of money, of payments, and of banking, it became a very constructive partnership, not only with them, but also with the Department of Banking, who's been fabulous. So the act created a digital asset depository institution charter. Actually, I think it was the MBA that really was happy to coin it the daddy charter. Now that's a reality. It can also be a digital asset depository department of an existing bank. I think that was something that was very significant that didn't exist in the Wyoming charter. But anyhow, we were the first to apply for it. We were conditionally approved earlier this year. We have pretty much everything done, all the capital raised and injected now into the Nebraska Corporation, and we hope to have our charter this month and start operating by the end of the year.
Thank you, Paul. The next question is for all of the panelists. For those who may be unfamiliar, could each of you briefly speak as to what a stablecoin is and what they may be used for? And Amy, we'll move over to you first.
Okay, I was hoping it wouldn't be last, because you would have probably said everything. So sorry, Cindy.
Still my best.
So, a stablecoin is really a digital currency that's designed to maintain a constant price. When you think about the Bitcoin white paper that came out in 2008, 2009, it was meant to be a peer-to-peer payments system. But what we found is that it's very difficult to enable payments with a token that fluctuates in price and sometimes quite significantly. So unfortunately, you've seen some investment in some of those spaces. But for us, we weren't interested in price volatility. We really wanted to have that consistent price so that our customers can actually use it. So, we maintain, and many maintain a mechanism to ensure that the price remains one token for $1 US. And you do that by supporting the stablecoin with high-quality liquid asset that are held in reserves. So those are actually, they exist, they're there for redemption if anyone wants to convert their stablecoin into fiat currency again. There are other ways to do it, and maybe we can talk about that. But that is a common way and one that we've chosen to do.
Paul,
I think I'll let Circle go first.
I guess I should know my audience. I was trying to be fair and not force Francesco to go first every time. But go ahead.
Amy, you're spot on with that. I think they. And use cases for these, I think that's one of the questions people ask, like what could you be using these for? And I think initially they were created as just a mechanism to interact on blockchain, whether it was getting in out of certain tokens and maintaining a stable price. That was probably an initial use. And now we've seen it develop into something more widespread and more applicable to real life. So that's, you're seeing cross-border payments. They're being utilized there, whether it's remittances or even being able to send cash to areas that are in desperate need of it, or being under war-torn areas where people need actual liquidity and get money in there to help them. So it's a use to still take actual intrinsic hard currencies like the US dollar, for example, and use it in a digital way that is more efficient, faster, and operates on moving money on a fraction of the cost it probably takes to send money through the traditional rails. So kind of taking existing systems and upgrading them to current modern day standards is the way that at least we think about sending, using stable coins like USDC. I know Circle's model is being able to send money as easy as it is to send an email, so it's kind of that thinking of we're not doing anything necessarily new. It's all the same stuff, but how can you make it more efficient, faster, easier for folks, and go from there? So that's kind of what I think of as a stablecoin.
So we personally don't really like I don't really like personally the term stablecoin. I think it dates back to the unbanked crypto era when, how could you get access to these assets if you didn't have this like banking doorway and to be able to buy Bitcoin or whatnot. Now it's obviously, changing into something that really can be used as a method of payment. We like to call it digital cash. From my perspective, a stablecoin is really when you have a digital asset that is like engineered or to essentially represent or peg its value to an underlying asset. I think the whole point of the Genius Act and of regulation is that if it's issued by a financial institution, the digital asset actually legally represents the underlying asset, which is a significant distinction, because instead of having to trust whatever mechanism has been engineered by the non-bank entity, if it's issued by a financial, and not necessarily a bank, obviously it could be a regulated trust, but the point is that Genius Act lays out very strict designation for how you would maintain reserves, such that you don't really have to trust the policy of that company. You're trusting the fact that it's a regulated institution. And that's why, banks are exempt from securities law, because you can trust that. The call report is public information. And so anyway, that's, from our perspective, it's about digital cash. I think when the vast majority of people end up using stablecoins, they're not going to realize that they're using a stablecoin or maybe even cryptocurrency. I think they're going to think of it as digital dollars. And so that's kind of, and I think from our perspective, we really are trying to push in talking to a lot of potential banking partners that we can work with, this idea of unbranded stablecoins. Does a consumer really want to hold a whole bunch of different named stablecoins? I think they really just want to transact in digital dollars. And I think that's the best way to look at what a stablecoin is.
Thank you. Next, I'd ask each of the panelists, in July, Congress passed and President Trump signed landmark legislation, which we referred to, the Genius Act. Please provide briefly your reactions to the passage of that and what it holds in store for stablecoins in the future.
I think the passage of the Genius Act was a watershed moment, really, for the United States, and not even just the United States, but globally. This was the first time that the U.S. on a federal level had passed something that was a federal framework for any crypto asset, really, in general. Before that, it was more like a state patchwork sort of system where you had licensings popping up. In New York, for example, through NYDFS, they had their BIT license. That was something we went through. But you didn't have a federal framework. And that kind of, you heard all this conversation around we need clarity, we need to understand the rules of the road. It's hurting developments, pushing people offshore. And that's still the case for the larger part of crypto, I would say, because we still need additional rules, like the market structure conversations going on. But Genius was that first step. And when we're seeing, we're only a few months removed from that being signed into law, we're seeing that absolute sort of shift in thinking that's happened since then. And it's been amazing. Circle's been very supportive of that act. I think it creates that framework that's needed here for development, not just in the United States, but globally. From that global standpoint as well, you saw a lot of countries kind of sitting and waiting and seeing what the U.S. was going to do, so they could also look at and model kind of their framework. Up until that, the largest comprehensive sort of framework was MiCA in Europe, and a few other host nations as well had some sort of framework in place. But the U.S. was just kind of trying to get through it and spent the last 4 or so years trying to develop this, and now we're finally here. So it's a huge boon for the U.S. to kind of continue and take this and continue running forward with the future of payments.
So yeah, to try to just to be added, because a lot of those things I would agree with 100%. Just to be additive to that, I think one to double click on the federal standard, it really did build a sense of stability and confidence in the system in the United States by having very specific requirements for reserve assets. They're limited in the types of assets that can be held. And that applies whether you're a federal or a state chartered stablecoin issuer. So first, it acknowledged the federal and state financial services regime that we have in the United States, but it also set that standard across the board. So it makes them, I think it helps change the perception that they can be used in ways that you can trust. And then, the second thing I'll just say about passage of Genius in the U.S., I think we're going to talk about it again later on, but the fact that this industry, I've been in it since like 2010, and we have probably all been doing this for a really long time, this industry has faced headwinds for so long. And especially in the United States, I think the government has been quite skeptical. And they should be. You should always kick the tires. You should always make sure you've addressed risks. You've addressed all the consumer protections and all those things. But now I think with this administration, even different than its perspective last administration, really grasps the value and the benefit, and has really given it momentum in this Congress as well. And you can just see what that does to creating laws that make sense for people, that businesses can rely on, and starts to build their strategies and their roadmaps, knowing that that's actually the law. It's a lot harder to change a law in Congress than even guidance, right? Which guidance can be overruled. So I will say that I do feel like, use the word watershed. I also feel like it's a watershed moment in the sense that we're now past the point of justifying the technology, and we're looking at financial services companies, banks, just companies in general, looking at how they can use this technology to be faster, better, cheaper, and more efficient.
We're obviously very involved, like Circle and others, in Genius Act from the beginning. I'm really happy at the result. I think if you look at, just about anything, it's great to be out in front. Europe was out in front in terms of MICA. I think one of the problems is, you take a lot of arrows when you're out front. Wyoming, I think, took a lot of arrows, as they do, coming out front, but Nebraska, I think, got it right. And I think the same thing is happening if you look at Genius versus MICA. No offense to how the Europeans have approached it, but I think they still were really looking at it from a previous lens of a crypto asset. MICA is it's a crypto bill, whereas I think Genius is really about a financial services, a banking, a payments bill, right? It looks at, hey, how do we give certainty that can allow the financial institutions, the mainstream, existing financial system to get into this? Because that's really what was required to turn it from something that was a gateway to gambling on Bitcoin to an actual medium of payment, the digital equivalent of handing a merchant a $10 bill. So for that to actually work, and that efficiency is something that we're now going to see a lot of great benefit to consumers from. That couldn't have happened without clarity and Clarity is, by the way, the market structure bill. We keep stumbling into that word, which is the next step in Congress with digital assets. But for Genius, I think, given that certainty and understanding to be able to allow the mainstream financial system to really start to integrate payment systems with this, and that's it's exciting to see it finally all come together.
Thank you, and I would agree. The certainty and the stability and credibility that federal legislation brings. We had a case in point in Nebraska, as Paul suggested, where the banking industry initially was opposed to the legislation, and then they decided we better get on board because there's something here that can be beneficial and useful for our customers. And with that, the next question is, with the passage of legislation, we always follow it with the implementation of regulations. What do you see in terms of the regulatory landscape now that the Genius Act has been adopted?
So I kind of look at this question, I'm going to start with the big picture first and then kind of into the specific U.S. Big picture as far as Genius passing, I think it does, and we mentioned it earlier, the U.S. had been a little bit behind, I think, kind of other countries globally looking at this. Now we're at the forefront on stablecoin issuer, the way we view stablecoin issuance and the way we view the usage of stablecoins. And so I think that does two things. I mean, the first is that it becomes the new example. And so you had mentioned MiCA, right? Like, it's possible there could be adjustments to MiCA based on this U.S. legislation. You know, these are ongoing processes. The U.S. and the U.K. just announced a collaboration on tech. So, you know, I think, and the U.K. is building out its stablecoin and digital asset regimes. And you see that going on globally. So now Genius can be that model to help, you know, kind of shine that perspective and make it easier for global companies to, and internet companies, which they are by definition global, engage in this space. And then the other thing, too, I would say is that it did also show to the world, like governments and central banks, that the U.S. now is on par or above. There is now that, again, that credibility, Senator used that word, but I think there had been conversations amongst multinational banking institutions like the BIS, the FSB, some of these large organizations, and just kind of even the central banks in Europe and elsewhere, that the U.S. just wasn't serious yet. And now we are. And so that changes. It sounds, I know that it's a subtle change, but I think it's super important to show that the U.S. now is demonstrating leadership in this space. When you look then, how is the U.S. going to implement this? They're already, Treasury just recently, about a week ago, issued an advance notice of proposed rulemaking on Genius, looking at a lot of different things and seeking comment. This is like the stage where you're saying, we're going to make regulations, give us your comments, and then they're going to issue, okay, here's our proposed rule, and then they'll finalize it. So this is an opportunity for industry to be involved. I would anticipate they're going to look at how to implement anti-money laundering rules for this space. They already apply, but Genius requires something, you know, more specifically tailored, which is always a good thing. I would imagine, you know, disclosures, and then I know there's also a question on there around the ability to provide interest and yield and other benefits. So I think all of those things are very important, and we'll start to see a lot more engagement. And I think this administration will be motivated to finalize this quickly. I would think in advance of midterms, but certainly before the end of 4 years.
Yeah. Yes. I'm sorry. Go ahead. Just expanding on the international side, because that we're dealing a lot with that. I think I really appreciate last year Congressman Andy Barr was here. He's chairman of financial institutions, but he's also was on the I think it's a task force for China Belt and Road and this competition. And there really is a huge ideological competition going on around stablecoins. There's basically two ways to do digital dollars. Either every citizen of your country becomes a direct customer of the government, or you maintain a bank intermediary or a financial institution, a regulated institution in between the two. And so we really consider kind of what stablecoins represent with a private issuer or regulated issuer as the free market model, right? The free world model. Versus, you know, a lot of the obvious motivation behind wanting to do the other approach, which is sort of like, you know, what China is really pushing in a lot of places, is frankly, you know, surveillance and whatnot, and things that values I think that we don't support in this country. So, you know, I really think that Genius Act was really huge for U.S. national security. If you want to be in the center of the Internet of Money, I mean, we had an opportunity with the dawn of the smartphone to really kind of curtail a lot of the freedoms on the internet. There was pressure at that point to force the government to put a backdoor into every Cisco router on the internet. Luckily, you know, we didn't do that. We didn't go that route, and now, you know, look at the national security asset that created, being in the center of the internet. Well, we also want to be in the center, I think, of the Internet of Money. And if you want to expand just the place of the dollar and the place of the United States in the global financial system, it was extremely important to pass Genius Act. So that's where it allowed. Now we actually have, I mean, a really quick, and I remember talking to Congressman Barr about this last year, and he got really excited about it, was, you know, we were talking with the central bank in Rwanda, And they, basically said, we love this idea, this is great. And then the next week they said, actually we're going to do this whole like CBDC, central bank digital currency. I think essentially China was talking in one ear, and there was really no U.S. federal framework to talk in the other ear credibly, right? Now we can do that. So that's something that I think is a great impact of the legislation.
Yeah, I think that's spot on. And you hit a point that's, I think, crucial here with this regulation is actually looking at ways to ensure that you have not only the necessary BSA, AML compliance requirements in place, but that really does cut down and crack down on any illicit uses of not just this technology in particular, but that is always a fear. So having those rules in place, I think, is very important that we get that part of this correct. I think as we continue moving along the regulatory process, like, as you said, Amy, getting those comments in there is super important, right? The federal government is going to be moving and crafting this over the next few years. I think it's 3-year implementation on this. So you'll start seeing these notice proposed rulemakings coming out, comments coming out, and I think it's really important to continue staying engaged as we kind of put this together. And while we have the framework of the actual law, getting the actual specifics in regulation is going to be crucial. And honestly, where it's important as well too is because there is the dual pathway in this bill, which is important. We have the federal floor that's set, but states can also create their own regimes. And in conversations I've been having with state officials is they're looking at, they want to get involved. They want to start getting the groundwork running on their state's laws to kind of create these. And they're asking us, like, oh, where can we start? What can we do? And at the end of the day, like kind of looking at the federal government and ensuring that what model states create would get approved by the federal committee and ensures that it's matching that is going to be important too, because we want to see this get right, and it's going to, we're going to see a lot of innovation happen on the state front too, from a regulatory standpoint, which I think we're really excited about seeing that and that development that it creates. But ensuring that everybody is locked in and looped in the way is going to be vital to how this continues growing over the next few years and gets implemented. But not just states, also other nations are looking to, as I mentioned earlier, they're looking to the U.S. to see what they roll out. And I think we're excited with how Genius was implemented and created so far, how it was crafted, but how it's going to be implemented, because it just creates a much more, I think, pro-innovation standpoint, which is what we all want to see, right? Everything was worried initially how things were going in the last administration, but I think now we're seeing that this is going to really create immense opportunity in the United States, and which is beneficial to the U.S. too, because it continues to grow the dollar dominance across the globe.
Okay, the next question from Ms. Kim. How do you think stablecoins will fit within the current payments ecosystem? And secondly, do you expect stablecoins to take significant market share in specific types of businesses like remittances?
There's lots of opportunity, I think, and possibility for payment stablecoins. We're looking at them in a number of ways. I can mention maybe 3 or 4. The first is, as I mentioned, we have a double-sided network, which means we have individual consumers on one side and businesses on the other. And we connect them to make payments for goods and services. And so we are looking for ways to encourage our customers, the individuals, and also the businesses to use PYUSD and stable coins for their business needs. And that also involves, when you're on the business side, and especially for small and medium-sized businesses, being able to, if you receive PYUSD for a good or service, to then hold on to it and use it. Use it to pay your accounts receivable or invoices, or for the international sourcing of goods that you may use. And so once we can start to create those networks, that we see an immense opportunity for cost savings, especially for small and medium-sized, but also large businesses, and a lot of efficiencies. You don't have to, you no longer, well, I'll save that for the next one. I would say would be remittances, as you've mentioned. We have a company called Xoom, XOOM, and we've looked at ways that stablecoins can kind of finally crack the nut, that is using crypto to make remittances faster and cheaper. That's always been the promise, but it's been very difficult, I think, for customers to solve for a number of reasons, very complicated reasons. But we're chipping away at it one piece at a time. So first, we've allowed U.S. PayPal customers, Zoom customers, to fund their remittance with PYUSD. And if they do that, we waive all transaction costs. So the only cost you'd be paying are foreign exchange, which we can't control. But otherwise, we waive those so that the consumer feels the benefit. Then getting the stablecoin over the ocean or over, to the other side is the hard part. So it's very hard. But we've also piloted some programs to work on the settlement part. So we'll settle with, and it's a very common model for remittances, you settle with the distributor on the back end. But the way that you have those funds available within 5-10 minutes for the recipient is that those are already pre-funded. You go through your AML checks and then you release it, but that money is already there. With stablecoins, you can eliminate much of that float and a lot of that inefficiency with cost. And we can do that without changing AML compliance and AML checks of the customer or the distributor. So it literally is just an efficiency play. So remittances, I think, we need to see more growth there, but that's an exciting place. Very closely related to remittances are, again, international cross-border purchases for businesses overseas. So it's a similar concept, international transfers. And then the last thing I will say is kind of corporate uses. So we've experimented on our own because we feel like we've got to be able to use this. So we've used it to pay some bills, some of our own accounts receivable. We've used, our PayPal Ventures has used it to fund investments in portfolio companies. We've used it for intra-company transfers and found enormous efficiencies. So we hope that other companies will be able to kind of capture those. So that's just kind of a sampling of kind of the ways that you can think about stable coins and how they can be faster and more efficient and transferred in real time when you need it and how you need it.
Okay, next, Mr. Nooner. We talked just briefly about the different pathways, state and federal, under the Genius Act, and as an institution seeking approval of activities here in Nebraska, how do you feel, and talk a little bit about those different pathways?
Sure. Actually, before answering that, if I will, just because we're in the remittance space, one of the things that we've looked at is, if you want a Mexican or a Turk or a Kenyan to hold dollars, you have to also issue something in their local currency, right? I mean, that's the rub, is the FX component. So that's really what we've tried to focus on, is how do we do this in other countries to create these multiple doorways into the Internet of Money, which is effectively decoupling the concept of FX from a remittance. A Kenyan can hold a dollar, we can hold Kenya shillings, etc. Onto this is the state and federal path. Okay. Well, so in theory, I mean, one of the great accomplishments of Genius Act is that it successfully maintained this interstate banking structure that we currently have in traditional banking today to digital asset or stablecoin activity. And I think that was really important. It was a very successful effort, not obviously Congressman Flood, but also the state of New York was very adamant to say that, hey, we can regulate, the states obviously can regulate this. We've been doing it already for several years. And so I think that in theory, they should end up being the same. Obviously in practice, what happens is, as a state regulated, and we're not actually just a stablecoin issuer, we're also a depository institution. So that it puts us in a little bit different bucket as, I guess, a vanilla stablecoin issuer that might be approved in a state. But I think that the problem right now for anyone working from a state charter or a state approval is we still kind of have to wait for these regulations to be implemented. Still, even though Genius Act is passed, the state of Louisiana doesn't really know yet how to handle a Nebraska issuer. So there's still work to be done, but in theory, I think the act has been very successful in kind of preserving that interstate banking system that allows a Nebraska bank or a Nebraska stablecoin issuer to deal with customers nationwide. There is a still undetermined, I guess, light registration state by state that's going to come about. So a lot of that is still yet to be seen, but it's not like a money transmitter license or a full license you have to seek in 48 states, which is the kind of situation that everybody faced before. I don't know how many licenses Circle has, but you can go on there and see it's like, I think it's 48 states. Now that's a state, the state path does allow you to have nationwide access. It's just the details of that still have to be ironed out.
Thank you. Mr. Castella, Circle recently announced a new collaboration with Fireblocks focused on making it easier for financial institutions to utilize stablecoin payments, custody, and tokenization. Help us understand what the collaboration involves and what it means for financial institutions interested in participating in the digital asset economy.
Yeah, I think things like that in general are kind of around a simple idea of making things easier for institutions to basically on-ramp these products and utilize them for whatever they're working on or kind of adoption in general. So it's a move in the sense of looking at ways to just make, ease of quality of life improvements and ease of use and adoptions for not just institutions, but then those institutions, clients and customers as well. So kind of looking at ways to further have folks that maybe aren't issuers, aren't adopters, or stablecoin builders themselves, but want to be able to take that technology, integrate it into their systems, be able to use it to expand to their customers. And it could be for internal use cases, it could be for actually transmitting money back and forth. But the whole idea is how can we just make this more accessible to actual other financial institutions that want to basically leverage this company or leverage this technology, but maybe don't want to create their own product or go that way. So we've been thinking through it about just expanding this. I think that's where that concept comes from of being able to make things easier for folks on the institutional side to adopt this without having to stand up everything on their own, but that's kind of the gist of it.
Thank you. Maybe this is a shorter answer for the three of you. What developments have surprised you, if any, since the passage of the Genius Act?
Well, as Amy pointed out, this has been a really long road. We're in our 8th year. It's been a 7-year upstream swim that's been pretty exhausting. And it's so refreshing to see since it's passed. We went from being the ugly stepchild to now, oh wow, you're a state chartered financial institution. Of course we can open an account for you. So that's been really, I've just been surprised at how rapidly that's changed. Essentially, any bank or financial institution in the world now is happily able to work with us. So that's been our surprise, at least.
Yeah, it has spurred a lot of activity, and especially with banks, where you would think that, there's been different viewpoints within that sector, but lots of interest in this space, and just across the board. So, like you said, it really has been a watershed moment, I think, for the industry. Again, no longer justifying itself, but in fact building and growing. So all of that's been extraordinary. Another thing that has happened is, these efforts to kind of, the bill has been signed into law 2 months ago, but there are efforts to kind of refine it already. Some of the things that appear in Genius. So. In some ways, it's always good to kind of make sure that you've done it well, done it right. You can always improve, but at the same time, it's 2 months out of the gate. So that's Washington for you, I guess.
I think I would echo that point. That's been probably the most surprising thing. Like, I can't really think back to the last time a bill got signed into law and then immediately people were trying to reopen it and get back into it while still negotiating much needed additions like the Clarity Act and RFIA in the Senate. So it's been funny to see how that's shifted. But I think even just beyond that, just the amount of interest and influx of adoption that people have been wanting to go on to this, not just from the institutional side of things, but even on, like I said, on the regulatory side of things with the states or other foundations that are wanting to learn more about this, want to know what this means, what this is going to change, right? I think there's just been a lot of excitement around it, and it's been much needed. Like I said, we've been doing this for almost a decade plus at this point, and have made very little progress on the federal level. So getting this done now is a massive win, not just for companies like Circle, who's an issuer, but the ecosystem in general, because it creates that momentum that we've been so desperately looking for. But I think it's been nice to see sort of that open arms embrace that we've been seeing across the board, and just curiosity around this, and all from a good spot. So yeah, I think it's been great. It's been really good stuff.
Thank you. Mr. Nooner, what's next for your institution from a regulatory standpoint as Telcoin goes through the Nebraska chartering process?
So we are actually at the pretty much final step. We hope to be able to get it before this conference, but I think we're basically there. At this point now, we're essentially preparing to start operating. So we hope to be able to open doors by the end of the year. I think a lot of it too is figuring out from the first meeting, I remember with Governor Ricketts at the time, what he really saw as a real opportunity for the state of Nebraska was that, when this really goes mainstream, only the largest, like 5% of banks are going to be able to do this or want to do this in-house digital assets. And so, you're really going to have, I think, demand from the other 95% of banks to look for sort of corresponding services for digital assets. And so that's kind of where the vision of the company, obviously there's a retail aspect of what we're doing, but a really big part of our longer term plan is figuring out how we can help community banks, small and mid-sized banks around the country get into this. So that's, we're kind of through the approval charter phase. We're about to get that granted, but really we're turning towards figuring out how we can turn this into reality, and also obviously working with the partners that we couldn't work with for so long in the traditional system to start plugging things in to be able to facilitate. There's the whole idea, I think we've driven this home, but in case we haven't yet, the idea of a stablecoin is the fact that it's not like right now I don't want to say any names of digital wallets or any kind of normal e-wallet or bank transfer. You're really actually just ordering a ledger balance transfer from the payer's bank ledger to the merchant's ledger. And what a stablecoin actually empowers is the direct transfer of custody to a merchant, cutting out all the intermediaries. So there's a huge amount of potential for efficiencies there. And so I think the next step really as an industry is figuring out the Stripes and all of the payment processors of the world, getting them on board, because everybody, I think, with a few exceptions, the people that matter, the people that have the payment process, they're obviously incentivized to make things work as efficiently as possible and save, pass on more savings to the merchants and also consumers. So that's really the next step, I think, is figuring out the plumbing and getting to work on that.
Thank you. PayPal recently announced they were incorporating cryptocurrencies like Bitcoin or their own stablecoin PYUSD into their peer-to-peer platform. Ms. Kim, can you please explain how this change came about?
Yeah, it was just kind of the evolution of our focus on enabling our customers to use PYUSD in particular, but you can use any type of crypto that's on our platform. And it really has to go with, Francesco, what you had said earlier about, almost as easy as emailing. So essentially, with PayPal, you can, buy goods and services using crypto. We have a pay with crypto function. So if you have crypto in your balance, you can use that to pay. Likewise with Venmo, you can transfer to one of our companies. You can transfer funds or crypto to each other. And for the first time, you couldn't do this with fiat, but we enabled it with crypto. You could transfer between Venmo and PayPal. But what this peer-to-peer piece is that if you're a customer of PayPal or Venmo, you can generate a one-time link and send that by email, by DM, by Snap, whatever you use, to somebody else. And if they click on it, you can send and receive money that way. So it's just one more way to get people using this in the way that they're expecting. The world is moving in that direction. So.
Thank you. Mr. Castella, now that the U.S. has its own federal stablecoin framework, how do you think the U.S. stacks up against other regulatory environments like Europe with MiCA?
It's great. So I think I look at Genius which is what we have here in the U.S., and then what Europe has with MiCA, is
this what's called it's essentially a stored value card called Sueca. So you can tap, and it really easily can get on any train or taxi, but also can pay in any convenience store. The way that the e-wallet works in Google and Android and Apple iOS really kind of shapes a lot of this. And I think what happens when you tap over there is if they support the stored value card, which is a much more efficient way of transferring with zero fees, essentially, the funds to the merchant. That works. If they don't support it, it'll automatically go through Visa, MasterCard, right? The user's not really thinking about that, and I think that it'll end up going that way, where once all of the payment systems kind of come on board with this, effectively you'll be tapping, and if the merchant supports this, it'll go the most efficient route. If it doesn't, it'll go through Visa, MasterCard, and all these intermediaries. And so I think it'll be way more seamless. Obviously, the polar opposite, I think, from sort of the crypto experience of the past.
I think one final question. We probably got a few minutes before the green lights go off. What are the most critical questions that you see facing regulators? I know Francesco mentioned the payment of interest. What are some of the issues that you think might be fleshed out in the regulations, or perhaps, as you alluded to, maybe some folks talking about going back to make some clarifications already within the first 2 months?
Well, I think one of those is going to be interoperability of regulatory regimes. We've talked about MiCA. Singapore has a regime. Other countries in APAC have regimes. The UK is creating one. And Genius Act, just for stablecoin issuers, but it does enable agreements between countries where the U.S. believes that they're commensurate regimes, and you can have some reciprocity there. So, as we have a technology and as payments, this technology and payments are global. I mean, we all interact in a global way, every day. Having that ability, having the permissions match around the world, I think, is going to be super critical. And I know the U.S. government's already thinking about that. And then I think the other one is going to be this issue around interest and yield. Genius prevents stablecoin issuers from providing interest or yield to token holders. The next question is, as you think about downstream intermediaries, should they be able to offer rewards to influence people to try to use this technology and to benefit from it? Rewards are such a common thing that are used in so many areas and industries. So that's the kind of, I think we're going to see some of that going forward.
I think it's important, right? Like, there are some of these smaller questions that we probably don't necessarily know and will pop up as we kind of get through the regulatory, writing process of this, that will start spurring some later thinking. I think right now you have a thought of where things are going, but as things kind of progress a little further, like more questions pop up or more applications of these kind of come together and formulate. As I think Amy mentioned specifically, I think it's really important that on a global scale that you are seeing that the laws and the regs all sort of match up and make it seamless, that you're not running into random clunky issues across the board. I think it's great to see sort of the recent announcement come from the US and the UK that they're going to start working together to kind of figure out how to work through some of those ideas. That's kind of what we want to see more of across the board from a global regulatory standpoint. But I think it's crucial right now that we're in that stage of feedback and questions right now on the law itself as the regulators are writing them. I think it's crucial that we get as much input from industry as possible to ensure that when we're in the rulemaking process and writing phase, that we're not forgetting anything or missing something. And I think it's vital down the road of sort of the adoption side of this, that we're thinking through all the possible use cases from industry standpoints, from consumer standpoints, and with the mindset of how we make payments in general easier. How do we just make this all easier at the end of the day for folks and to integrate? So I think that's kind of one of the more important thoughts going through.
Paul, anything to add?
Well, yeah, I think one of the exciting things about the legislation in Nebraska is that it's more than just a stablecoin bill, right? Genius is effectively addressed stablecoins, which is the technology of money side and the technology of payments. I think what's still missing is the technology of banking part, and this gets to the concept of providing yield. Should you be able to provide yield for simply holding and self-custodying a digital asset, and why are you providing that yield, right? Or should you require them to deposit that digital asset or that digital dollar onto the balance sheet of your financial institution to provide a yield? So I think those are the areas, and that's where I think Nebraska really can take a lead. The Department of Banking here we're already figuring all of these, a lot of these questions out. What does it mean to be a digital asset depository institution as opposed to just a stablecoin issuer? In other words, how are we extending the technology of money and payment side of this into the future of banking?
Okay, thank you. That's all the questions that we have. We'd like to move to the Q&A from the audience. We've got some mics set up around the room. If you have any questions, please raise your hand and the microphone will be brought to you.
I have a question. First of all, thank you all for being here. I'm Mike Flood. I would say this. What does all of this new competition coming into the payment space mean for consumers? And so I think back to 1988 in my hometown where beef packing relied on labor from El Salvador or Guatemala or Mexico, and these hardworking folks would get their paycheck, and then they would use Western Union to send it to this foreign country to help their family, and sometimes they were, no matter, some of the services would charge an unconscionable fee to move that money. What does this regime change with stablecoins mean for transaction fees? Paul, you talked about in Japan where you're not going through MasterCard or those normal rails. And how, secondarily, will the MasterCards and the Visas and the Discovers and the American Expresses look in 5 years under this new, in this new world? And how do they still provide value beyond the credit they extend?
If this was a radio talk show, that would be long-time listener, first-time caller. But please go ahead and address that.
This is for, okay. So one of the really cool things about the NFIA is that it created the first banking charter in the United States that explicitly authorizes connecting consumers to DeFi, decentralized finance. So for us, we're just about to turn on in our Mexican entity one-to-one free rails between electronic peso and a fiat one in any bank account in Mexico. And we're doing the same here in the United States. So then beyond that, it's really let DeFi market. I mean, the DeFi market will give like 10 basis points off of mid-market, way better than any FX you're getting from any sort of remittance company. So I think that's the key, is that if you can have a institution on both sides of the corridor that are really just enabling the consumer to connect to decentralized markets, they're going to get the best deal.
I would also just say I think competition is good for consumers, right? As those more companies come online in this space, you'll have to compete to get those customers. And how are you going to do that? With lower fees and better service. On the lower fee side of things, I mentioned that our Zoom product, if U.S. customers of our Zoom product, XOOM, fund their remittance with PYUSD, we waive all of our transaction fees. That's a significant savings. You'll still have the FX, the foreign exchange, that we can't control, but we do pass that savings on. And so I think that as you see more competition, more people will have to match that or do other things to help attract those types of customers to the platform.
You're spot on, right? That's what it is. That at the end of the day, it's making lives easier, and if that means that the industries that are producing these products or creating these products have to compete with one another, at the end of the day, the idea is that you're going to ultimately have something that works better, is more efficient, is cheaper, is more instant, whatever it might be. But that's the whole goal, is to drive that up, and I think we get that with Genius. That's the intent behind it, just kind of create that competition drive and kind of encourage the entrepreneurial spirit of the U.S. to kind of go and do that. So it's all going to be good stuff. I think it gets back to that 5-year question. Who knows what that looks like? But the goal is, at the end of the day, to make things better than what they are now and make them more efficient. So I'm excited for it. I know even just as a consumer, it'd be nice to have things be more efficient. I think on the remittance question, right? Like I think that's a great example of a pretty obvious use case, right? Like having things be able to go cross-border instant, not take a few days to clear, and then be all done at a fraction of a percent of what it really costs right now to do that. That's an obvious right there win case for folks that are looking to have real use cases and understanding, why should I use this? What's the difference? So I think that's an important part.
Other questions?
A question right here.
I don't know if I'm jumping up in line here. But I just got a mic. So I'm Kevin Crown. I'm a student. So my question might be pretty remedial. So forgive me for that. But given that the U.S. dollar left the gold standard in 1971, that of course came with some economic risks, and so the stable coins are backed by what it sounds like U.S. dollars or other financial instruments that are fairly liquid, like U.S. Treasury bills and stuff. What are some increased risks for stablecoin issuers due to it being backed by the U.S. Financial instruments that are liquid like that?
I think the industry sees it in the inverse, that stablecoins come with less risk because those reserve assets are held and available. If you take your money, for example, to a bank and you deposit it, banks, a typical business model for a bank is to create credit, lend that money out, add to the money supply, all these important needs, which is why there's a lot of regulation around that to make sure that everyone trusts the bank and uses banking. So it's critically important. With payment stablecoins, those reserves have to be held, and they are available, and they're high quality and liquid. So you have to be able to, based on the Genius Act, you have to be able to liquidate them, quickly to meet your redemptions. And have a strategy for that. You know what types of redemptions you're expecting, and make sure that your assets are there to meet that. So I actually look at it as the inverse. It actually creates a level of stability by maintaining those reserve assets. And you're absolutely right. You can be cash deposits at a insured depository institution, short-term U.S. Treasuries, overnight, over-collateralized reverse repurchase agreements, which are collateralized with short-term U.S. Treasuries. So those are all things that are highly liquid, and it's a very limited list. And those reserve assets are available for redemption.
Okay, so if you don't mind, I have a follow-up question to that. What are the stablecoin issuers doing to, I guess, protect against if another bank run happens, which of course spurred on like the Great Depression? What are stablecoin issuers doing to protect against that in case there's a run on stablecoins?
First of all, and I think you should actually take this. Let me just say something first, because everyone I think is familiar with the challenge that Circle faced when there was the Silicon Valley Bank, Signature Bank collapse. I think right now it's pretty silly that we're backing stablecoins with treasuries. Why not just have a bank be allowed to use a sub-account of a master account to hold the reserves? That's going to make everything work a lot better. Where this will all go, who knows? But I think that's the way that just pushing for regulation to evolve to where we're all doing this a little bit more sensibly. The issuer too, by the way, is not really the rise and fall of a currency is not. The beauty of being the issuer is that it's actually the consumer that's holding the Turkish lira that's going up 20%. That's heard. As the issuer, you're really just earning the sort of Fed rate on the currency, right? So I think that it's really more about figuring out how do we get the liquidity side, like you just mentioned, to work as smoothly as possible. But I'll let Francesca.
Getting at your question, I think is also important, and this is even another further touchback to Genius and some of the requirements now that are under this law. On the sort of redemption side, in the event that there is an issue where there's a bankruptcy that occurs, and we actually in Genius modify that the bankruptcy holding requirements that gives holders precedent in an event where there's a hyper-liquidation issue or a problem where the company now is no longer solvent. So it puts them at the front of the line to ensure that they are made whole first before anybody else. So there's an orderly process that we have now implemented in law that would get at this issue where we're ensuring that actual holders of these tokens or these stable coins are made and made a first number one priority in any of those issues. There's also additional requirements for capital buffers and increased actual holdings of the reserve side. You also remove the sort of the rehypothecation requirements or problems. So there's a prohibition on being able to go and reinvest those assets or lend them out. So issuers at the end of the day are kind of creating sort of a multi-step process to try to prevent any problems or if there are problems that at the end of the day holders are made whole and dealt with and not put into a position where they're left wondering where their money is.
Awesome. Thank you, guys.
Okay. I saw a young lady with a question up in the back.
Yeah. So the cross-border use case makes a lot of sense, but I'm asking a question from a community bank perspective. So an FI under the Durbin cap, we love card usage. There's also solutions. We serve businesses that don't do cross-border payments. And now under UCC Article 12, you can exchange a digital draft, but it rides existing rails. So RTP being real-time, the bank's holding a reserve account. So what would be kind of the motivation or use case for a community bank to get involved?
Well, I'll take that if you...
And since the red lights are on, if you can do it in a minute.
I'll try. Well, again, we've been talking a lot about cross-border, but we're forgetting the fact that there's a huge amount of inefficiency still in card payments in the United States. So I really think that there will be a concept of a digital cash account, right, where a community bank or any bank in the United States is going to enable consumers to be able to access effectively stablecoins, but a digital dollar that they can self-custody and that can be pulled outside of the balance sheet or the ledger of a bank. It's a little bit of a weird concept to think about, but that's the significance, and it can make things a lot more efficient. That's my opinion. So community banks, I think, the key is how do we figure out how to involve community banks when they don't necessarily have the resources to do this all in-house.
To finish up, I'll turn over to Taylor in a minute, who will give you some more instructions, but let's give the panelists a round of applause, please.
Thank you to our panelists. And I'll just give a couple quick instructions before we break about lunch. Number one, as you may have noticed, if you are planning to join us for lunch, there's a table number on the back of your badge. If for some reason you want to join for lunch, there's no table number, you didn't sign up for it already, come see me. For those of you who informed us of a dietary restriction, there's a card at your place, and if you have any issue, please either see me or another member of the staff wearing one of these green badges. We'll get started here with lunch, and then partway through the meal, after we've all had a chance to eat, we'll do the fireside chat with Congressman Style.